Hello, Jason Bates here, owner of Electrum Financial, a mortgage broker located right here in beautiful Cave Creek, Arizona, where a mortgage is not a flip of the coin. So if you're looking to purchase or need to refinance, I would like to be your broker of choice as I have access to the lowest rates at the lowest costs in Arizona. And if you don't believe me, call me. Here is this week's mortgage market at a glance. In the past 2 weeks, there's been big news about inflation and seemingly big news about Fed policy. Both are threats to low interest rates, but not just yet apparently. After taking last week's huge inflation numbers in stride, check out my last video of course, the bond market moved on to focus on Fed policy this week. The Federal Reserve, aka the Fed, is often a source of confusion for consumers when it comes to mortgage rates. The evening news says things like, quote, the Fed kept rates unchanged, end quote, and people assume it has something to do with mortgage rates. The Fed's funds rate, the thing the Fed actually decides to hike, cut, or hold steady, has almost nothing to do with mortgage market. Mortgage rates are infinitely more concerned with the Fed's bond buying policies. Movement in the bond market is the foundation of day-to-day mortgage rate changes. Bonds can move for a variety of reasons, but the most reliable and most basic reason is supply and demand. By acting as a massive buyer of bonds, including the bonds that directly underlie mortgages, the Fed increases demand relative to supply. Higher demand means higher bond prices, and higher bond prices equate to lower rates, all other things being equal. In other words, Fed buying equals lower rates, and they've been buying more than anyone for a long time. Ideally, the Fed won't need to do this forever, but change is scary when it refers to the Fed's withdrawing support. It was this sort of change that sparked the taper tantrum in 2013, which accounted for some of the most abrupt rate spikes in decades. Markets are understandably cautious about a repeat performance, and market participants thought they saw hints about tapering in last Wednesday's Fed meeting minutes. Those comments were nothing like the discussion surrounding tapering in 2013. Back then, multiple Fed members were in agreement, and Bernanke, the Fed chair at the time, was already on record discussing the conditions for tapering in specific terms. This time around, the comments relating to tapering simply reiterated those from various Fed speeches in recent weeks. Not only is the Fed far from unanimous on this front, there's also a lot more uncertainty about when they'll actually pull the trigger. Even then, to say comments were highly conditional would be an understatement. Here's what they said, you decide. Quote, a number of participants suggested that if the economy continued to make rapid progress toward the committee's goals, it might be appropriate at some point in the upcoming meetings to begin discussing a plan for adjusting the pace of asset purchases, end quote. Translation, the Fed isn't even talking about tapering just yet. There are just 4 Fed members who agree they should talk about it in the future and if certain things happen, which is pretty logical actually. The market reaction ended up being logical as well. Spooked at first, but quickly calming down. The Fed will need to see several months of strong economic data before any robust discussion of tapering. Even then, the pain of the taper tantrum in 2013 means that traders have been gradually getting in the position for this discussion for many months. When the time comes, there will be much less to freak out about, at least as far as the Fed bond buying is concerned. In this week's economic data, existing home sales moved lower yet again. The explanation has been and continues to be one of inventory. The following chart shows the monthly change in existing home inventory. It's a very seasonal thing, and it always peaks with April's numbers, which is reported near the end of May. Each red bar is April. With last week's report, the past 2 Aprils now stand as the lowest gainers for housing inventory in decades. Well, builders are building as fast as they can. Supply chain disruptions, land availability, labor force issues, and price pressures are causing delays. construction simply can't keep up with building permits. So there you have this week's mortgage market at a glance. If you'd like to know more, reach out to me. I'd like to meet you, and that is for sure. Thanks for watching, and if you're looking to purchase or refinance a home in Arizona, I would like to be your broker of choice. Till next time, take care and stay safe.